It is a pleasure to address to all of you again as we put up our quarter 3 financial year 19-20 results of the financial year this year. We view these numbers as a positive steps toward our goal for this financial year. You all are aware of the fact that we do not limit ourselves by measuring our success from quarter to quarter, as we strongly believe in delivering long-term value to our esteemed shareholders. Moving further, I'm delighted to announce that we have a considerate growth in terms of profitability. This is mainly because of the product mix. Our business in India has positive results and has been up by 15%. Evox, which is our subsidiary in Germany, is EBITDA positive in the current quarter as compared to the previous quarter and growing steadily. The EBIT for Evox is also on the positive side. We will continue to work hard for our shareholders, and I'm really thankful to all of you for your relentless support towards this. We look forward to your questions, but for now, our Senior Finance Manager, Mr. Parag Kataria, will explain some financial numbers to you. Over to you, Parag.
Thank you, sir. Now I'll just take everyone through the numbers for this current quarter. Our sales on year-to-year basis is on positive side and has an upstream of 102 million rupees and has grown from 1,017 million rupees to 1,119 million rupees. That is approximately 10% growth in the revenue. Correspondingly, the EBITDA has increased by 112 million rupees from 417 million to 417 million rupees from 417 million rupees to 529 million rupees, and that is approximately 27% growth in EBITDA. And as a percentage of total sale, EBITDA is having a percentage of 47% as compared to 41%. Our consolidated PAT for this quarter has also increased by 37% from 253 million rupees to rupees 346 million rupees in the current quarter. Now we would open the lines for your questions, and if in case you have any questions, please feel free to ask us.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Rohit Sinha from Emkay Global. Please go ahead.
Thank you for taking my question. Hello, can you hear me?
Hello?
Yeah.
Yes.
Hi sir. Congratulations for a good set of number. I mean, there was significant growth in EBITDA and EBITDA margin. So I have a couple of questions. Could you share that the top product sales for the quarter?
Parag can tell that, I guess.
Top product. The top product which we have sold in the current quarter is the Peptidase.
Yes. No. So how much revenue was there?
1 minute.
PB1041.
ये क्वार्टर में कितना दे रहा है?
95 million.
लास्ट क्वार्टर में कितना था 18 में?
ये था 236 million.
So Ronak, the sale for the top product is 9.5 crore versus 23.6 crore of quarter 3 December 18.
23.7 crore.
23.67 crore
Okay. So this is largely, since our US customers have, the orders are lower from that side, is it because of that the revenue has contracted significantly, or is there any
Yeah,
other
so the US side revenue is contracted significantly, but India side revenue has gone up. So that overall basis, it's like 10% growth from the quarter 3 18 to this. But if we just remove the top customer, the growth is much higher.
Okay. Okay. So can you share top 10 client and top customers revenue share?
Sorry, as a policy, we may not be able to share that, which are the top 10 customers.
So, top client contribution at least.
Yeah, that I can tell you.
Yeah.
इसका ही बोल सकते हो.
इसका ना
So, the top client is 9% in this quarter compared to 23% in the last quarter. Third quarter of 18-19.
Last year, how much it was?
23% for this quarter. Right now it's 9%.
Okay. Okay. And sir, wanted to know the Evox sales and EBITDA for this quarter.
So the Evox sale is 57 million, 5.7 crore.
Okay.
For this quarter, and EBITDA is 17.7 million, 1.77 crore.
17.7 million. Okay, so this is positive. Last versus last year, how much it was?
So last year it was 38.6 million, and EBITDA was minus 14.5 million.
Okay. Okay, so it is there. Okay, sir. Just wanted to know, this EBITDA expansion was because of the growth in animal healthcare segment, or is it because of other geographies doing well for this human healthcare?
There is a growth in animal health sector and various other sectors also. There is a contraction little bit in US market due to top customers, but otherwise the growth is on all the sectors.
And your question is on the margin. So margin improvement is because of the focus and focus businesses, right? So we were on the consolidation business. So now the raw material cost has gone down, and second impact is salary cost is more or less constant. So
okay. So are we able to maintain our FY20 guidance on the revenue front? Because on the margin side, I think we are pretty much in line. But on
the revenue front, probably we will end up with 440 CR to 445 CR. But on the PAT side, we will be able to manage our guidance.
Okay. And sorry. And going forward, how would be our strategy towards the revenue growth and sustenance?
Ronak,
Yeah, Rohit sir.
Rohit, okay. Sorry about that, Rohit. Rohit, basically our strategy is now to consolidate our various different strengths and areas and stay focused on the marketplace where our strengths are. So we continue to consolidate our position in the market where we have enormous strength, and we feel that our growth will accelerate hopefully after another 3 to 4 quarters.
Okay. And sir, the growth which we are seeing in other geographies, is it all, it is across the segment, or is there any specific segment like animal or bio?
Across the statement, Rohit.
Okay. That's it from my side.
Yeah, it is in a difficult conditions, worldwide conditions right now. We are able to maintain our growth across the segments.
Okay.
Thank you, Rohit.
Thank you, Rohit.
Thank you. The next question is on the line of Dinesh Kulkarni, an individual investor. Please go ahead.
Hello, sir. Congratulations on good set of numbers. My question to you is, if we see cost of materials consumed on a consolidated basis has gone up from 13 odd crores, almost 13 crores to 23 crores. That's almost doubled. Can you just explain me that, please? So, what's the name? Dinesh Kulkarni. Dinesh, when we see our total consumption, we have to consider our cost of material consumed plus purchases and plus changes in inventory. So if we see on a totality basis of these three numbers, we are having a total consumption of 176.58 million as compared to 199.51 million in the current quarter. So it is somewhat similar range, and yes, there is a slight increase in the cost of material consumed that you can say is on account of the higher sale which we have achieved. Okay, so just one more question. Are you seeing any price increases in your raw materials, in any of the significant price increases, in any of the key raw materials?
I don't see it, Dinesh, because even if there is a rise in the key raw material on the overall basis, the impact is very, very minimum.
Okay, that's fine. Thank you. That's my question. I'll be in queue if I have any other questions. Thank you.
Thank you.
Thank you. The next question is on the line of Shikha Mehta from Equity Capital. Please go ahead.
Hello,
Shikha. Yeah, good afternoon.
Yes, sir. I just had one question. So, could you give us some guidelines or what to expect with regards to new products or what's in the pipeline?
Because the products are always is a combination of enzymes which we supply to various different segments as a solution to the problems rather than selling a particular enzyme. So the results are coming across the sector in various different areas with considerable significant impacts on the revenue and sales.
Right, but we had a couple of new initiatives that we were thinking of exploring, like the palm oil, etc. So, is anything in the pipeline now, or from where will our revenues be growing moving forward?
No, as I explained to you, our basic concentration is the area we have decided to concentrate on our strengths immediately and put the efforts into the same direction. So palm oil, even though it is on our charter and map, we are not actively pursuing it.
All right, sir. And any update on inorganic growth?
Inorganic growth?
At this point of time, we are looking, Shikha, but nothing to declare or report about.
All right, great. Thank you.
Thank you, Shikha.
Thank you. The next question is on the line of Paritosh Chandra, an individual investor. Please go ahead.
Hello.
Hello, Paritosh.
My question is regarding, is there any capital expenditure planned in the next financial year or next quarter? This is my first question.
Capital expenditure. Yeah, Paritosh.
Yeah, the first question on your capital, yes, we are using substantial capital into our growth in research and development.
So, Paritosh, we just acquired in this quarter a land of 15 acre in Nashik, and that we are building up a modern R&D center, and we are thinking about 100 CR in the next 3 years as a capital investment for the R&D center.
Okay. So, what product pipeline?
Human nutrition, animal nutrition, a lot of areas in the food processing. We have enormous opportunities in all these sectors, and we are going to concentrate on our existing product and expanding the market segments in those.
No, how long before this capital expenditure starts?
I think we already invested 33 crore roughly, and I guess coming year we will be spending another 15-20 crore on that.
No. What I mean to say is, when will it start contributing to your top line? As of now, from what you say, I understand. And you are in process of setting up the R&D center, right?
No, let me explain this again to you. We already have a current R&D centers, right?
Yes.
So we do spend a considerable amount of money on our R&Ds. But because we are in the global nature, and the name of the business in our sector is that it is a continuous R&D, an expansion of R&D into those fields, whether it is a baking area, food processing area, animal nutrition, or the human nutrition. As you can see, there are a lot of interesting challenges globally, and everybody is looking for the solutions. So this new facility will give us opportunity to really expedite our research areas. So R&D is never stopping business. It is a continuous business. We are going to put a lot of efforts into making this R&D as a global research center.
Okay. Okay. Fair enough. Thanks for the answers. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Praveen Kumar from Equitas Capital. Please go ahead.
Hello. Thanks for the opportunity. I had a question on your slowdown in the US revenues. I wanted to understand if you could elaborate whether this slowdown you expect it to be more transitory in nature, or you see it as more of a structural slowdown. And if you could elaborate the reasons behind the same.
Praveen, interestingly, you keep in mind that our lot of previous numbers were a lot of dependent upon the one of our major customer.
Yes.
That customer, if you take it away from previous numbers to this year's number, you will see that our growth is
8% for the US.
17% in the other customers. Okay.
Okay.
So our growth is going very well. The numbers which get little distorted is that when you get a big gap and you're trying to fill that up, So that is where the numbers get distorted.
So your experience with your biggest customer, for example, I think we had earlier alluded that that biggest customer has contributed 9% of the revenues. So you expect it to stay at this level, or you expect it to again go back to earlier levels?
Good question. They even don't know about it right now, and it's a global effect. So we don't know, you don't know, and I don't know what is going to have an effect of coronavirus or all these kind of things,
Okay.
So we look at it as they are looking in the way of restoring back again, but time will tell.
Okay. Thanks. I had another question on your segmental revenue split. So again, on that, do you let's say I look at it over the next 3 to 5 years, do you expect it to shift more away from human healthcare and more into animal healthcare and bioprocessing, or what's the kind of expectation one should have from it?
On the contrary, we are not focusing only on one segment per se. We are focusing on all the segments: human nutrition, animal nutrition, and vis-a-vis other verticals. Okay.
In fact, Praveenji, we expect like it has to be equal in all the three segments. That is what we intend to do in the next 3 to 5 years.
Okay, so you would expect the segmental split to largely remain the same, you would say?
No, I would put it this way: equal in all the segments, like human, animal, and food and food processing. That's our goal and target.
Okay, so one third, you mean?
Exactly.
Oh, so you expect, in other words, you implicitly expect animal healthcare and bioprocessing to grow much faster. You're focusing there much more than the human healthcare segment.
You got it.
Okay. So just one additional question on that. So given that you're largely, large part of your revenues have traditionally come from human healthcare, what sort of capabilities have you developed or are in the process of developing to, meet this kind of a goal?
Can you repeat your question again?
No, what I was asking is that as of today, if I see a large part of your revenues, more than 70% are coming from human healthcare, right? So traditionally, that's where a lot of the revenue has come from. So in order to achieve your goal of equal split between the three segments in the near future, what kind of efforts have you put in the other segments, or what kind of initiatives are you taking in the other segments to reach that kind of a goal?
We already had all the enzymes what is required for all the segments. It was just the focus approach which we needed, and we are consolidating our portfolios, and we are focusing on the marketing. Large R&D center will also contribute in the future. So making all of this, I guess we can achieve those. Did I answer your question?
Marketing exercise in these segments in the recent past, are you planning to add that?
Sorry, Praveen.
You referred to marketing, so have you added to your marketing strength in these other segments, or are you planning to add marketing strength there?
Yeah, we are adding the people, and we are in the process.
Okay, thanks for the opportunity.
Thank you.
Sure.
Thank you. We'll move on to the next question. That is on the line of Anupam Agarwal from Lucky Investment Managers. Please go ahead.
Hello, Anupamji.
Anupam Agarwal, your line is in the talk mode. Please go ahead. As there's no response from the current participant, we'll move on to the next. That is on the line of Rohit Sinha from MK Global. Please go ahead.
Yeah, thank you for taking my question, sir. Just
sorry to interrupt, Mr. Sinha. Sir, we are not able to hear you. Can you speak a bit louder?
Hello.
Yes, sir. Please go ahead.
Yeah. So, thank you for taking my follow-up question. Just wanted to know what's the cash in the balance sheet at this current stage?
1 minute, please. So, Rohit, the net cash on the balance sheet is 156 crore, roughly.
Okay. So for FY20, roughly what kind of overall capex amount would be there, apart from that 33 crore what we have invested in land acquisition and development? So overall, basically, what would be the overall capex number for FY20?
Rohit, we are on a working, but on a roughly side, it should be about 25 CR.
Okay. That's it from my side.
Thank you, Rohit.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. next question is on the line of Anupam Agrawal from Lucky Investment Managers. Please go ahead.
Yeah, hi sir. Good afternoon and congratulations on a great set of numbers. I had two questions. First is that you mentioned somewhere that you plan to invest 100 crores in the next 3 years in your new R&D plant. I just wanted to ask you what sort of revenue can generate over time from that 100 crores of asset that you would be investing?
We were looking to grow 15 to 20%.
15 to 20%
year on year.
No, so my question was how many turns, what could be the asset turns on that 100 crores of asset that you are building?
Asset turn would have...
At this point in time to give you exact numbers on those, but let me get back to you on that.
Okay. And so second question would be what is your dependency of raw materials from China and what is your thought process behind the disruptions that can happen due to the current states?
So on the raw material side, we are very less dependent, maybe 1 or 2% our raw material comes from the China.
Okay.
So on the dependency front, we are not really dependent on them.
Okay.
But on the marketing front, yes, there can be some disruption. Particularly, we export globally, and some of our US sale goes to China as well, directly or indirectly.
Are we seeing some signs of disruptions or any slowdown in the past 1 month?
As of now, we haven't seen any effect.
Okay. Do we sell directly to China market?
Well, very little quantities, yes.
We do.
Okay, so that's all from my side. Thank you.
Thank you. The next question is from the line of Dinesh Kulkarni, an individual investor. Please go ahead.
Hello, sir. Thanks for taking my question again. I wanted to know what's the long-term strategy or revenue growth you would look at, say, from a 3 to 5 years perspective. Yeah, that's my question.
Dinesh, last call, I think like Raukaji has already given the numbers that what we are dreaming or what we can look at it is about 900 CR in 3 to 5 years, right? And that is still the valid plan what we are going with it.
Okay, that is 900 CR 3 to 5 years. And should we assume the margins should remain what they are now, or there should be some improvement in margins as well, EBITDA margins and EBITDA margins?
At this point of time, we will still keep the same thing, 40 to 48% what we used to keep, but we can add.
Well, current margins, look at our current margins, Dinesh. They are all improvements as we consolidate and do more. It will affect, but also we understand that there is a competition area which comes in. So concept is to keep those margins intact.
Okay, thank you. That's my question. Thank you very much.
Thank you. The next question is from the line of Shikha Mehta from Equity Capital. Please go ahead.
Hello, sir. I just had a couple of follow-up questions. Also, since we are a debt-free company and we keep generating cash every year, do we have any specific dividend policy or something we want to do with the cash we're generating?
Well, as you know that every year we keep on increasing the dividends, right?
Right.
And that is the policy will continue on as long as companies. More interest for us is to grow this company on a growth basis, and there are various different things company is taking a measures onto so that we can deliver a better value for our shareholders. Okay, and we will be hopefully continue to increase our dividends. year per year.
And apart from dividends, is there anything specific we plan on doing with the cash we hold?
There is always a plan. Company has a plan. When it will execute, we'll obviously let you know.
Okay, thank you.
But not in the dividend policies, not into the dividends.
All right. Yeah, thank you.
The next question is from the line of Rajesh Vora from Enzyme. Please go ahead.
Good afternoon, gentlemen. Mr. Rathi, another participant also asked about the reason behind that top customers' revenues from the top customer falling significantly, but I think it wasn't answered. Could you please answer that question?
Rohit, Rajesh, what exactly you want to know?
The top client of your company, you could generate revenues about 9.5 crore in this quarter versus about 23.6 crores a year ago. So there's a significant decline. It has more than halved. What are the reasons behind that significant decline, if I know?
I don't know. Obviously the demand is little lower than quarter-to-quarter basis.
On an annual basis, if we look at FY19 or 9 months number, if we look at, there would be again the similar picture?
Possible.
9 months this year?
Sorry, can you repeat?
Of this fiscal year, from April 2019 to December 2019. If you compare that with a previous year 9 months,
yes.
Is the picture quite similar?
Yeah, it's quite similar.
Yes. Then it is not quarter to quarter, right? It's 9 months.
Right.
Also the same picture. So there is obviously some significant reasons behind such a significant fall.
There will be the reasons we don't know at this point of time, but that's what it is. So
customer hasn't given you any idea of why they are not picking up so much? I'm sure your marketing people are in interaction with them on a regular basis.
We can't comment on at this point of time, Rajesh.
Okay. And secondly, 100 crore in R&D, is that what you said over the next 3 years? So you mean you will be spending in the operating expenditure of R&D or capital expenditure of R&D?
It's a capital expenditure.
Okay, that's very significant when I look at your total net block of 200 crore as of 9 months.
Yes.
So is that something very different you are trying to do than you were doing in the past?
What we said is we are going to continue on the same path.
But you had not invested 100 crores in R&D in the last...
That is why we are investing this time, no, Rajesh? We did not do something which we should have been doing.
Okay, all the best.
Thank you.
Thank you. The next question is from the line of Anupam Agarwal from Lucky Investments. Please go ahead.
Yeah, hi sir. Just from a better understanding point of view, if you can just explain between the 3 segments that you are in, which segment has a better margin business? Definitely your human health is much higher because you're reporting a better margin right now. 3 to 5 years down the line, you said the mix would change and roughly be 33%. So is the margin profile going to change significantly when the mix changes, or just trying to understand which segment has a better margin profile?
Well, the margin profile depends on the product, and it also depends upon the mix. And we are changing the profiles and we are changing the products. But as I said, our goals are to keep our margins at a high level as it is right now.
Okay, sir. Thank you so much. That's all from my side.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Paritosh Chandra, an individual investor. Please go ahead.
Good evening. Thanks for taking my question is about the existing capacity utilization. Like, how is there any percentage which you can give us? Like, how much capacity is being utilized right now for your existing infrastructure?
Well, it's difficult to measure, but we estimate about 50% at this point of time.
Okay. If it is 50, okay. Sure.
Sorry to interrupt, sir. Your voice is breaking up.
No. What I'm asking is, this 50% utilization is your manufacturing units, the units which manufacture different set of enzymes, right?
That's right.
Okay. So R&D, your existing R&D units are completely being utilized. Basically, they are the cost centers.
Exactly. The R&D, we have a very short space.
Okay. Fair enough. Thanks.
Thank you. The next question is on the line of Manoj Shroff, an individual investor. Please go ahead.
Hi, sir. Thanks for the call. I had a few basic questions. Maybe if you can't answer on the call, I'll take it offline. First was the customer retention rate.
Sir, we are not able to hear you clearly.
Could you hear my question?
Yes, sir. Please go ahead. Sir, can you repeat your question for the benefit of the management and the participants?
Yeah, my first question was, what is the customer retention rate?
Manoj, very high.
Yes, sir. So what is the customer retention rate?
I cannot tell you exactly, but it should be very close to 95% or so.
Okay, got it. And in terms of India market share, I think in the prospectus it says that our India market share was 15%. So, and if you want to talk about the growth in the market since the prospectus, so have we outgrown the market? So at that time they were forecasting market growth of 8-10%. So how has the market grown in the last few years, and have we grown ahead of the market in India, and what is our market share now?
Can you please repeat?
What will be our India market share?
Our India market share is roughly around about 55%.
Okay. India market share 55%. Okay.
But in the area where we are present, right?
Right. So, okay. And the overall enzyme market, I believe in the prospectus it said our market share was 15%. So, have we grown ahead of the market in the last few years in India?
Well, we are growing into the new segments. We are finding the new applications, and that is how our growth is coming. That's how we are ahead of the traditional market growth.
So what has been the India growth market in the whole enzyme sector in the last few years?
Manoj,
yes, sir.
As we are all aware of it, it is a global market and things are changing dramatically it is not one country based anymore. Things are happening, whatever happens here also is reflecting into world market and vice versa. So, a lot of different areas are coming to the forefront, and we are addressing those, and that's where the growth is coming.
Got it. So in India market, how, if you can share some, again, if it's not a relevant question, I can go to the next one. In terms of, I just want to see how how competition is, how Novozymes and Biocon, how are we competing with them? Is it on a price competition? I would guess no. The price would not be it's about solution, I guess. So if you want to talk about something in how are we competing and how will we gain market share? Is it in India we're going to gain market share, or as you alluded, it's more a global market share that we're looking at?
See, the thing is, you have a very interesting and valid question. The thing is, the market is changing, the mix is changing, and competition is always going to be there, So there is not a question of no competition is not there. But the market is changing, Manoj. So accordingly, we are very nimble and fast to change, and that is what our aim is. And that is what this new facility also will give us the means and tools to change ourselves and take the opportunity what time permits us or give us. Okay?
Then just a couple of more. What is the percentage of revenue coming from patented products? Patented products, what is the percentage of sales?
These are not patented products, Manoj. These are solutions-based products, not a patented products.
Sure. So why I was asking, because Novozymes gets around 90% of their sales from their patents. So I was just asking if we have a comparative thing.
No, their business are a little bit different.
Model is little different.
Yeah, model is different. Business is little different.
Got it. So just last one, the number one customer that we have in the U.S., which sector are they from? Are they from the oil and gas sector?
No, it is from the human nutrition sector.
Got it, sir. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Praveen Kumar from Equitas Capital. Please go ahead.
Thanks for the opportunity again. I had a follow-up question on your growth plan over the next 3 to 5 years. What I wanted to understand was, if you look at it in terms of customer, product and geography, how much of it do you expect from new products and new geography versus new products but existing geography? That kind of a split. Have you thought about it, and what could you share on that front?
Well, we are still working on it, and I guess it requires some more time for us to finalize the final draft.
Okay, but would it largely come from newer products or existing products, you would say?
At this point of time, both.
There is always going to be new line of products also, and at the same time, we are trying to expand the existing products also.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Dinesh Kulkarni, an individual investor. Please go ahead.
Yeah. Hello, sir. I just wanted to know, you talked about revenues almost doubling from here to 900 crores in 3 to 5 years. So what's the visibility you see there,
Well, we are pretty certain, confident or certain about what we are trying to do, and visibility is fairly decent.
Okay, that's great. And one more question on that. How do you see your working capital changing? Because I see there has been an increase over the last few years, working capital cycle days. So is it going to remain same, or is it going to change, increase rather?
It will probably remain the same.
It will remain same. And what is the number now currently, if I know, on the LTM basis, or if you are projecting for FY20, what would be that number?
If you can hold...
capital cycle
sure. Parag, huh?
Working capital days is 106 days right now.
106.
106.
106. Yeah.
Okay. And, sir, what's the FCF on LTM basis now? Free cash flows? Sorry, free cash flow.
Yep.
I think I can get back to you on that.
Okay, fine. Fair enough. I think that's it from me. Thank you.
Thank you, Dinesh.
Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Well, thank you so much for your participation and asking some very probing questions. And we appreciate your support and cooperation throughout, and look forward to working with you. And thank you all the shareholders. We really appreciate it.